A gauge of what to expect from the local market at the open then, given all that uncertainty. Stan Shamu joins us from IG in Melbourne now. Stan, what do you think? I mean, obviously we saw a rally in risk assets leading up to the Senate vote, but now I guess a lot of uncertainty there about the fiscal cliff bill?
Yeah, it seems that way. I mean, of course, it always seems like politicians always have to wait right till the last minute to knock something up. And it was in typical fashion as well this time around when they kept meeting right till the end of the year and trying to come up with some sort of an agreement. Of course, the Democrats are focused on protecting the middle class. They feel that makes up the core of the US economy. At the same time that the Republicans feel they need to protect the wealthy as well. So it really does seem like they're struggling to find that middle ground. Of course, it did seem like something concrete had been knocked up. I mean, who knows, maybe this could still go ahead without too many issues, but at the moment it does seem like that deal stands with, you know, tax cuts being extended for households earning up to $450,000. I mean, of course, those unemployment benefits have also been extended, but some of these spending cuts will continue to be an issue, and like you were saying before, that's what most of the debates now surrounding. Of course, the Democrats will always put across the argument that they need some of these to be able to get back some money into the economy, but of course the Republicans will always see it a bit differently. But I think they're much closer now. I think we should focus more on the positives as opposed to the negatives. I think they're closer than they ever were, and it's just now trivial matters that need to be sorted out. And I'm sure with most of the big issues like the tax breaks and the unemployment benefits knocked out, I think everything else would probably smoothen out over the course of the next few days. As it stands, I mean, we're still looking at a fairly positive start to Asia. Risk currencies opened relatively flat from the close yesterday. I mean, about 8 a.m. I think, when the US trade finished, Australian time that is. So it doesn't seem like it's really hampered sentiment too much, and we shouldn't really feel too much different about how we closed in the US on Monday.
So have you got an opening call then for the ASX 200 for the first trading day of 2013?
Yeah, I mean, of course, based on yesterday's close, we're calling the Aussie market up 1.2% at about 47.05. So that's still a pretty big gain. That will see us trade. I think the last time we traded there was May last year, so that will see us trade right near the high from that month, which is about 46.25, I think. And going into today's session as well, we do expect to see a very strong start from the iron ore miners. We're calling BHP, last I checked, up about 1.1%, so that leaves it at about 37.79. So that's quite a hefty gain for BHP, and that will definitely stretch across the iron ore names. We've got iron ore prices jumping to 144.90, so that's quite a significant jump for our biggest export. That will definitely carry through into 2013 with a very good start for the mining names, and of course it will improve optimism across the materials space. I think last time I was actually talking about how we feel the materials recovery will lead the market this year. Of course, there were serial underperformers last year, and I think there's just a bit more confidence being restored. We expect to see the whole risk space perform fairly well today, and as investors focus on the positives from the fiscal cliff negotiations. We've got Japan still closed, so that might limit activity in the region, but at the same time there's plenty to go on. We've got the AIG manufacturing index out today. We also have the commodity prices basket due out later today, so that will be a bit of a lead for the local market. But for all intents and purposes, I think everyone will still be pinned on the fiscal cliff. Of course, we still have limited news flow on the company front due to the holidays, but there's definitely a lot to look out for on the US front.
Okay, so because we had been hearing from CommSec earlier that it was likely to be a pretty cautious trading day, but you're expecting a pretty strong start.
Yeah, absolutely. I mean, we still do expect a strong start. Whether we manage to maintain a positive momentum is another thing. We might obviously see a bit of profit taking as well as some investors return to trade and see some fairly solid profits from trades placed before they went on holidays, and this might just encourage them to just lock them in and exercise a little bit of caution. But yeah, no, absolutely, we do still expect a strong open.
Just in terms of currencies and what you've been saying there, interesting, isn't it? Because obviously the US dollar, as you said, remaining very weak against most risk currencies apart from the euro. Are you expecting this to continue?
Yeah, well, the euro is a bit of an underperformer at the moment. Of course, we saw, for example, the pound spiked to, I think, 162.7 against the greenback. We saw the Aussie dollar nudge through 1.04, although it wasn't permanently. It was a little bit temporary. We saw the dollar yen resume its uptrend as well to about 86.78. So it does seem like the euro is the underperformer at the moment, still hanging just below 132. And I think the trigger of that was those comments by German Chancellor Angela Merkel. She expects some of these recent reforms and, of course, austerity measures to start hampering the economy going into 2013. It seems like Europe will continue to go through some hardships. The region's still far from a firm recovery or firm signs of a recovery. So I think they still have a long way to go down before they start ticking back up. So that's probably going to be the next point of focus for markets as soon as this fiscal cliff issue is put behind us. Of course, Europe was one of the main issues last year as well, so it's not too surprising to see them pop back into the picture. Of course, the euro will depend on a lot of growth from the region, and without growth forecast for a while yet, I don't think there's much upside in the single currency. Of course, Angela Merkel's comments just reignite fears that the market already has. So that probably will be an issue going into the European session later on today. As well, we've got plenty of PMI readings on the calendar in Europe. We've got Spain, Italy and European manufacturing PMIs due to be released. We also have German CPIs. So any further signs of weakness from these readings would surely see the euro come off a bit.
Just on the yen as well, because it's been interesting. We've been watching the Aussie hitting 4-year highs against the yen there. I guess this race to the bottom in currency markets going to continue there, particularly when you're talking about the US dollar and the yen?
With the yen, I suppose everyone's expecting this weakness to prevail through the year. I mean, of course, we've got that new government in place there. Well, focused on keeping the yen as weak as possible to help revive the Japanese economy. Of course, it's a big export market, so a weaker yen is very beneficial for the economy. We've already heard that they're looking at targets between 85 and 90 for the dollar yen to help revive the economy. So with a BOJ meeting coming up as well, I think it's on the 23rd of Jan. I think a lot of people will be expecting further action. They've already taken further action. They've already taken action in the last meeting, and I think the political pressure now is just quite immense on the BOJ to act. It certainly seems like the new government will stop at nothing to making sure that they put across some measures to stimulate the economy, and that will definitely keep the yen suppressed for most of the year.
Thank you so much, Stan. Yeah, it's going to be an interesting day, isn't it? As always, thank you so much for that. Stan Chamu there from IG. All right, of course, we've been trying to keep across all of these developments happening out of Washington. It's the afternoon.